welcome to the midweek edition of Business Morning on Channels Television. Good morning and welcome to Business Conversations that concern you. So let's do this together in the next 55 minutes. I'm Ini John McCoy. Let's start as usual with happenings in the global oil space. Oil futures were mixed today, recovering from early losses as a threat of new sanctions on Russia raised supply concerns, countering fears of weaker demand following a build in U.S. crude stockpiles and Shanghai's extended lockdown. Brent crude futures were up 11 cents at $106.75 a barrel, while U.S. West Texas Intermediate crude futures fell 11 cents also to $101.35 in an early trade. The United States and its allies have prepared new sanctions on Moscow over civilian killings in northern Ukraine, which President Zelensky describes as war crimes, demanding commensurate punishment. Russia denied targeting civilians. Proposed EU sanctions, which the bloc's 27 member states must approve, would ban buying Russia coal and prevent Russian ships from entering EU ports. Britain also urged G7 and NATO nations to agree a timetable to phase out oil and gas imports from Russia. Meanwhile, member states of the International Energy Agency are still discussing how much oil they would together release from storage to coal market. And coming to Nigeria now, the House of Representatives Ad hoc Committee on Unclaimed Funds has directed the Nigeria Social Insurance Trust Fund, the NSITF, to pay 3.8 billion naira to the federal government account. According to the chairman of the committee, the money is unremitted funds in the past 3 years. The committee is also set to issue a warrant of arrests on MDs of banks as well as heads of MDAs who failed to honor its summon. The committee had last week summoned them for failing to honor its invitation earlier.
So far, we have been able to discover infractions to the tune of 268 million, money that belongs to the federal government of Nigeria. We have asked them to let us know when that money will be paid directly to federal government accounts, in which they promise us that they will come back after reconciliation and then let us know when the money will be paid. Then a few minutes ago, we also discharged Nigerian Social Insurance Trust Funds, though not acquitted, but we just asked them to also go and reconcile their records and also interface with the consultants and then come back to us. Their infraction is to the tune of 3.8 billion. That's what they are owing the federal government of Nigeria. So we have asked them to make this money available to federal government, to transfer the money to federal government. And it will surprise you to know that these figures that I mentioned here are extraction from the document that is submitted before us. We did not gather this document outside their system. So I wonder what will happen by the time they fully submit all the documents required by this committee.
And the total debt stock of Nigeria is likely to exceed 50 trillion naira as the Debt Management Office plans to borrow additional 6.39 trillion naira to finance the 2022 budget deficit. Meanwhile, the federal government has paid the total sum of 7.27 billion naira as installments on loans acquired from the World Bank and International Monetary Fund, and that was done in February this year. Well, we have to dissect that and related issues on Moshui Temitope, investment strategy analyst with AfriInvest Asset Management, joining us this morning. Hi, Temitope. Good morning.
Good morning. Thank you for having me.
Yeah, so once again, we are talking about the debt stock of Nigeria, and a lot of people, first, I mean, should we pair it against revenue? Should we pair it against GDP? Are we still on safe grounds from your perspective?
Okay, starting from the metrics of debt sustainability assessments, because your question is in the purview of DSA, Debt Sustainability Assessment. So it measures the ability of government to take up more debt, and it's also a function of government revenue an economy size. But you and I know that you cannot pay debt with GDP. You pay debt with revenues, just like you own, and you want to say that your family members will pay your debt. You are paying with your income, because GDP is a combination of consumption, investment, government spending, and exports. So you cannot, so most times when the government talk about the fact that debt to GDP ratio or debt service to GDP ratio is below the IMF threshold of 55%, and it's even below the fiscal sustainability act of about 40%, because it's currently below 40%. And even in the next 5 years, it's expected to stay below 40%. But the concern has to do with revenue. We are talking about the fact that government is not even getting enough revenue. Lately, we've been mentioning how oil theft has affected Nigeria oil supply, and how, revenue has continued to remain depressed. So I think the attention should be drawn to debt service to revenue ratio, because investors are concerned about liquidity. In fact, if you want to invest in any company, what you look at is liquidity. Would this company be able to pay my debt immediately, my obligation immediately? And it's a function of if the company is liquid. Same with countries. You have to look at government ability to earn. The revenue is actually very important, because, debt are rolled over. So when a debt matures, government wants to roll it over. So that is also...
And here we're talking about the servicing, not the debt itself. So I guess that's also important to draw out.
Is extremely important. Is very, very important, because if you look at debt service, to revenue ratio from less than 50% in 2014, now we are looking at 85.5%, and the projection is that it will exceed 100% by 2025. And it's a function of several factors. Before now, we were talking about how increase in debt stock, has continued to contribute to debt service, because
and debt servicing, it takes away the liquidity for capital expenditure,
exactly,
which is what will drive more liquidity and development in the economy.
In fact, you're going too far. If you're looking at capital expenditure, government is even struggling now to cater to recurrent expenditure. So capital expenditure may not even be on the table, which is very essential for sustainable and inclusive growth. For instance, we are looking at over 90% of revenue that will go into debt servicing, and we are still talking about problems around infrastructure, because when you ask a manufacturer today what their problems are, they'll talk about infrastructure. Power, transport. If you talk to a farmer today, in addition to insecurity, they'll talk about transport, road, power. Even an average Nigeria, is a major bane on even MSME, because you know that what drives an economy is MSME, and their challenges include, infrastructure, electricity, and a number of others. So as you will continue to spend more on servicing debt, because it seems there's no light at the end of the tunnel, because if you look at what is happening globally, I'm sure you're aware that interest rates are rising,
of course,
which means interest expense to the government to increase. For instance, the last Eurobond issuance by the government is over 8%. Same issuance last year was just 7%. So if you even look at US interest rates, and it's currently at 10-year yield is about 2.5%. This was just less than 1.6% in 2021, less than 1%.
And when you talk about Eurobond, it just reminds me that we're the first African country to access Eurobond this year. And I don't see it. I know that, one of the observations from that was that, we were able to even increase our rates because we still have investors' confidence in the country's bond. But on the other hand, why do we even have to go out that early, to get a Eurobond?
Because the country is grappling with a lot of challenges that we didn't envisage last year. One of it is the fact that oil production is not even up to the quota of IMF. We are doing below 1.6. So that is a problem on its own. State government at some point may not be able to pay salary. So all of this, government has to be aggressive in the Eurobond space. And again, if you know that interest rates will rise, it's usually better for you to front load debt obligation. Government is able to do that at 8%.
That's true, because I know the US has warned that we're expecting more hikes.
You should expect more. In fact, in Nigeria, we're expecting increase in interest rate, because if you look at the last MPC meeting, about 4 members suggested that rate should increase.
For a hike.
And in addition to that, a number of African countries, Egypt,
Ghana, South Africa.
So they've increased policy rates. So at some point, Nigeria will have to increase interest rate, and that's...
So you think in the next MPC will see a hike?
We may see a hike at the next meeting or the following one, because of several factors. You know, the market has to be made competitive from the angle of seeing other African countries increasing rates. That's on the one hand. And again, if you look at inflation, though we may want to talk about the fact that inflation is from the angle of food and all that, there's also increase in money supply. For instance, look at the waste and means of the government. Yeah. Last year alone, waste and means increased by 4 trillion naira. And, you know, by the rule, it's expected to just account for 10% of previous year's revenue, which means government should not have gotten up to maybe 1 trillion. But we got 4 trillion. The money is in circulation. It's also contributing to, you know, inflation. So what I mean by increase in money supply affecting inflation is that naira is increasing above productivity. So when you have excess money circulation, it leads to what? If there's no increase in domestic productivity, you import more. Yeah. It puts pressure on exchange rate, and exchange rate is a strong component of the CPI basket because there's imported food inflation, and even other components also depend on it. And, you know,
just yesterday, the MBS, 2 days ago, the MBS talked about the import bill for food exceeding the exports, obviously, which is enormous in Nigeria.
Is actually very problematic. And I think it's even very important to address that now because of major shocks we have seen in recent times. Countries are now becoming, you know, they are looking at how to become self-sufficient. We all know that no country can assume to be totally self-sufficient. Even the United States, China cannot. But they are trying to ensure that in the short run, just 2-3 months or a year, they are able to provide for their citizens when there's a major shock. So I think it's even very important now than ever we begin to look at self-sufficiency in terms of food production. You can see what Ukraine-Russia crisis is doing to prices, especially with not even, let alone energy. We've seen series of shocks just within the last 5 years, 2016, 2018, that was a US-China trade pass. We also saw another one in 2020, that was global pandemic. We saw that. And just barely 2 years, we are facing another one, which means we should be prepared for...
And now the lawmakers are talking about fixing the price of diesel. I think that's also dangerous.
Actually, I understand the point they are coming from because of stable prices.
Yes.
Right. But they are talking about this because there are inefficiency in other sectors of the economy that could have mitigated the impact of increase in prices, you know, on welfare of people. If you want to fix prices, then, you know, it's going to cause another problem because they'll, you know, black market, all of that.
Exactly.
We're
still talking about how to get subsidy out of petrol. So if we start with diesel again, and the government is borrowing this much to even fund the budget. I mean, we had the projection of 3 trillion naira for subsidy, which we now know that most likely is not going to cover subsidy for the year.
Yes. So,
you know, and government is still going to borrow for that. We're talking about 80-something% of debt servicing, not debts, to revenue. I mean, this leaves us in like a circle that seems it has no end.
There's no better time than now for Nigeria to embark on a serious reform, because when you go by major macroeconomy data indicators, it's showing that we are heading for a dire condition. For instance, you've just mentioned about debt service. Last year was just 85%. As I've told you, we are projecting over 100% in the next 3 years. Why? Because even the projection did not even factor in the current oil theft that has continued to affect revenue. So if you're able to factor that into the equation, you are looking at way above that. 100% may be overly optimistic. So I think it will continue to challenge the government in terms of sustainable and inclusive growth, because if we don't devote so much to capital projects, manufacturing sector, industrial sector will not be efficient. And when you talk about poverty, poverty is a function of employment. Yes. If people are employed, they'll be able to feed themselves and family. Because
even insecurity we're talking about, I mean, one way or the other is connected to unemployment and poverty. It's actually
connected to it, because an average person anywhere in the world loves self-esteem. Nobody can come out today to say that I'm a bandit. Nobody will want to come out to say I'm a terrorist. So in a society where optimal employment is ensured. Look at the United States and the number for that country. Unemployment is 3.5%. In fact, 6% is below that is closer to the lowest unemployment level in 50 years. It's just 0.1% to get to that level of 50-year low. So if you are able to create decent job, I think it will be able to address some of these problems of insecurity.
So now, how do we reverse this circle? I know it's a conversation we've had one time too many. We talk about capital projects, which is one major way, that the economy can be boosted, and then we can, have infrastructure, have employment created. But to get that capital project, then the government needs money, and then we are talking of already a high percentage of debt servicing to revenue. So how do you see us getting out of this circle? I don't say frustrated.
I think the magic wand is addressing insecurity. No nation in the world, no developed nation in the world can attract or any form of investment without addressing insecurity problem. You can never build a house closer to where there's a major insecurity, because you don't know what will happen in the next minute. Your investment may go just in just 1 second. So no foreign investor, which is why if you look at capital importation, you see that it has dropped from over 26 billion in 2019 to less than 7 billion last year. And with what we are currently seeing, I'm sure you shouldn't expect so much. It's not even easy to, it's not difficult to predict that next year or this year, you shouldn't expect so much. So what I'm saying in essence is, if security problem is addressed, if it's addressed, because, investors will look at the condition, and they are looking at it on a broader view. They are out of the country, they see what is in the media and all of those, so they think that a lot are going wrong in the country, especially when it comes to insecurity. So if we are able to address insecurity, I think we can now begin to look at other issues in ease of doing business. Those ones are just secondary. Ease of doing business, you talk about electricity, multiple taxes, cross-border trade, exchange rate problem.
Compromise within the system.
So all of those, but if insecurity is not addressed, those are just by the way. In fact, monetary policy authority can do nothing. The CBN intervention cannot even do anything. I tell people, and I always emphasize that, we cannot address all problems with money. The CBN is trying as much as possible to finance or provide funding for different sectors of the economy. But you and I know that what they require is not just funding. For agricultural sector, we've seen a lot of intervention in that space. But how does funding address insecurity?
Farmers sometimes can't even go to the farm.
How do you use funding to address, access to farm? And even from the farm to the market, how do you use funding to address it? This is is in the purview of the fiscal authority to provide infrastructure, ensure that there's security, and also ensure that there's a board that regulates standard. Because one of the problems with agricultural sector in Nigeria is because our products are not standardized. So we need to empower the Standard Organization of Nigeria. In fact, maybe I'm sure you may not even know that there's a Standard Organization of Nigeria, or you have even forgotten this.
We've had conversations with them.
So just imagine, and they've been in existence since 1970. But we are not, most Nigerians, I'm sure they are not even seeing, because when you pick a sachet of noodles, sachet of this, you will see that the quality is not just there. You see some are still the same price, right? But the quality has reduced significantly. So we bring about the question that what is the Standard Organization of Nigeria doing in that regard, so as to make Nigeria farmers, agricultural sector competitive globally? If we want to compete in the international space, we have to ensure standard.
Ensure standard and ensure security.
Exactly.
That's what I get. Yeah. Well, thank you so much, Temitope Omoshiri. We just have to continue having these conversations.
Right.
Nigeria is our country, and I mean, we don't have an alternative to that. Thank you so much for sharing your thoughts with us this morning. Yeah. So passionate thoughts there by Temitope Omoshiri, investment analyst with AfriInvest Asset Management. And we'll take a break now. When we come back, we'll head to the commodities space. AFEX is standing by to bring us up to date on the activities. This is Business Morning on Channels Television. You're welcome back. Well, it's also a bullish week on the AFEX commodity market summary for the weekend at the 4th of April 2022. Most of the parameters closed in the green except for the total turnover, which dipped by over 36%. We have Femi Kinde, structuring and originating analyst with AFEX, joining us with the details. Hello, Femi. Good morning.
Hello, good morning.
Good morning. So let's have a rundown of activities on the exchange for the week ended.
Yeah, so for the reporting week, we actually saw a drop in the value traded to about 0.72 billion naira, which represented a 36% decline week on week. For the volume traded, we actually saw a significant increase to about 2.1 million contracts executed on the exchange, which represented a 11.91% increase week on week. For the number of deals, we saw a significant surge of about 61.36% represented week on week, as 401 deals were executed. And for the financial benchmarks on the exchange, we saw a marginal uptick in the AFEX Commodity Index and a significant surge in the AFEX Export Index, closing the week with a 3.44% increase week on week. For the volume traded across commodities, we actually saw the trade of maize contract, soybean contract, paddy rice contract, sorghum, cocoa, and ginger contracts on the exchange. In terms of commodities prices, maize actually experienced a surge compared to the previous week, closing with a 2.65% increase week on week, as maize closed the week with 240 naira per contract. For paddy rice actually closed the week at 252 naira per contract, representing a 4.3% increase week on week. So soybean closed the week at 403 naira per contract, representing a 1.33% increase week on week. However, sorghum actually followed a negative trend, or an opposite trend, closing the week at 226 naira per contract, representing a 0.02% decline. Cocoa also followed a similar trend, closing at 1,221 naira per contract, representing a 1.27% decline. And cashew closed the week at 600 naira per contract, representing a 0.04 decline week on week. For more information about our report, you could actually go to our website at www.afexnigeria.com, or you could follow us on our social media handles at afexnigeria.com or at Comex by AFEX.
Yeah, so Femi, I'm sure with all of these figures, especially the gains for the week, some investors will want to gain exposure to the space. How do they do that?
Yeah, so I believe onboarding on AFEX is the cheapest and most easiest way to gain exposure on the commodities market. So the easiest thing to do would be to onboard on the exchange, fill the required KYC documents. Also, it will be important for you to attend our regular seminars of which we organize to educate the public about the commodity space and current happenings in the commodity space. Also, it would be amazing for you to read our commodities report on our website. We have diverse reports covering diverse commodities, covering diverse states, covering the dynamics that actually affects the pricing of these commodities during the seasonal period. So yes, it's advisable to onboard on the exchange.
All right. And what factors should they consider before investing in commodities?
Yes, so there are quite some important factors to look at before investing into commodities. So the first would be the demand-supply dynamics. It's always important for you to understand what actually fosters demand and what is the nature of supply in the country. And this also dovetails into the government policy. How does government policy at the end of the day affect the pricing of these commodities? Or how does it affect the supply of these commodities in the local economy? So it's important to also have or keep abreast with government policies. It's also important for you to understand the production cycle. Unlike developed countries, Nigeria is usually a two-seasonal product cycle where we have the dry season, which does not really produce as much or produce the volume to which we need, and we have the wet season, which accounts for a significant proportion of what we consume the next year. So it will always be nice for an investor to understand that dynamics, understand the production cycle. It's also very important to understand some weather factors. How does weather actually affect these commodities? Where are the key producing regions, etc. and etc. So, and On AFEX, we actually provide weekly seminars or periodic seminars to which we try to engage the market. We try to educate them on how the fundamentals of the commodities market work, what are the recent happenings and the recent developments. So yes, those are the key factors I believe one should understand before engaging into the commodities space.
All right, Femi Kende, thank you so much. Structuring and originating analyst with AFEX. Thank you so much for the market analysis. While still staying on AFEX now, a lot has happened in the commodity space in the first quarter which just ended. Food inflation, demand-supply imbalance appear to be widening as a result of a variety of factors, and of course that's including the Russia-Ukraine crisis, which is still ongoing, unfortunately. Reviewing recent developments in key commodity markets and analyzing the factors that contribute to fluctuations in commodity prices in the first quarter would help in adjusting to new realities, especially in the second quarter. We have David Ibidakbo, Senior Research Analyst at AFEX, joining us for that conversation. Good morning, David.
Good morning, Ini.
Yeah.
Nice
so how did good to have you here too. So how did the key commodities perform so far, and what are the potential impacts on food security when we look at some of those parameters that are considered?
So from the start of the season to date, we've seen some form of rally across major grain commodities like maize, which returned about 40%, paddy rice, which is doing about 15%, soybean about 12%, and sorghum, which has returned about 6%. So for investors, it has been a good run. For investors that are exposed to these commodities, it has been a good run for them. However, for households, you understand that when prices of commodities like that are rising and there's no corresponding increase in income levels, right, it increases their woes, right, and reduces their purchasing power. So that's the case that we are seeing currently, as also that currently groaning under the increases or the spikes that we're seeing across commodities, even in the open market, right? And also, if you look at the outlook for these commodities, especially when you put into consideration the event that's happening in the global space, which is the crisis between Russia and Ukraine, between Russia and Ukraine, and the effect on fertilizer prices, and also the effect on wheat prices, which are major pass-throughs to Nigeria, you understand that the outlook is actually bleak, and we should see a possible pressure on food inflation going forward, right? And we know that when we talk about food security, we are speaking to affordability and availability of these commodities, right? So when prices continue to rally, it's not really a good one for households, and if we don't have policies that would kind of stem or ameliorate the effect of these shocks in the global space and other shocks that we're seeing in the domestic space, we may see further rally across these prices.
What are the current requirements in areas which have been termed deficient? Would this be, can we say that food scarcity is a problem at this time?
Yeah, obviously, food scarcity would always be a problem if not addressed, right? Because if you look at across our major commodities that actually stand as major staples consumed in Nigeria, like maize, soybean, paddy rice, sorghum, we've not been able to close that demand-supply gap, right? So for most of the commodities, we still have production levels underperforming consumption levels, except for some commodities like paddy rice, which we've been able to at least spur production to levels that meet up its consumption levels, right? And so this speaks to some of the areas that I would say needs to be addressed, and that's we must be intentional in spurring production levels. And that also speaks to some of the challenges that the farmers face, which is more to access to finance, access to affordable inputs, right? right? Because one of the challenges that we may face this year is the fact that there may not be affordable input for farmers to put because of the oil rally in fertilizer prices, right? And if we don't solve these very underlying fundamental challenges, we would continue to it will continue to affect Nigeria's food security, which is very, very key. We need to actually support that levels. And also, when we talk about some other bottlenecks in the agricultural value chain, it has to also be fixed, and that's one aspect that AFEX is really paying key attention to, and also seeing how we can ameliorate those bottlenecks in the food system of Nigeria.
Yeah, but we do have government policies, that's supposed to affect and enhance, this food production. How is that going from your perspective?
Yeah, so I would say that the intention of the government is quite clear, and the intention has largely revolved around two basic objectives: to support production levels and also to stem the pressure on prices of commodities generally. And we've seen that over the years with some level of, I will explain, with some level of growth in this sector. So I think one of the most recent policies that I would like to point to is the CBN's Brown Revolution, which speaks to improving wheat production domestically. By the CBN disbursed about 41.2 billion naira to support the production of wheat in Nigeria. But if you look at it, so supporting the production of wheat by adding additional 750,000 metric tons to current levels around 55,000 metric tons is a far cry when it comes to when we look at what national consumption is at around 5.5 million metric tons, which means over the years we've actually imported to cover this gap, right? And in the light of the Russian-Ukraine crisis, it's very important for us to support it even faster than that, right? I think one of the things that we just need to improve on as the federal government and also even private players in the space is to be proactive, right? That's proactive, yes, because if you look at it now, we are currently going to be reeling from the effect of the Russia-Ukraine crisis on commodities prices, because there is a lot of shift in demand now, right, to move to other staples like rice, soybean, and the rest, which will continue to pressure prices, right? So I think it's a step towards the right direction from the part of the government, but we need to intensify. The journey is too far, and we need to also create a situation where we have to leverage on even private sector, even like the AFEX Commodities Exchange, to boost food security, to boost availability and also affordability of these commodities.
All right, David Ibidakwa, thank you so much for sharing your thoughts with us this morning. I know the government is listening, and we also need to ensure that there's food security in the nation. David Ibidakwa, Senior Research Analyst with AFEX. Enjoy the rest of your day.
Thank you very much.
Just before we head to the markets, we'll take a break, a short one, and we'll be back. You're welcome back. Well, for the first time this month, April, we saw the bull we had the bull at the equities, the NGX, and I think that puts a little bit of smile on Anite's face. Hello, Anite.
Yes, good morning, Ini. You got that right. I'm beaming with smile. Although I'm not a trader, I'm just a market journalist. So, but of course, the equities market, it is the barometer of economic activities in Nigeria. So let's get started with how the market closed Tuesday's trading session. It was up by 0.19%, the first time in 3 trading sessions. You remember the April markets, April trading started on Friday. It was in the red. On Monday, it was also in the red. But the likes of Zenith Bank, GT.co, and Seplat made the market to rebound into the green territory, which is what you see here. And that translates to about 48.26 billion naira in terms of value. So that shows you that the market, yes, indeed, it's in the dividend announcement season, or the dividend season. So the market is still trying to, get its groove back. Now, take a look at the sectoral performance. The impact of those tier 1 lenders rubbed on their sectoral counter, which was up by 0.28%, or about a quarter of a percent increase, while Seplat did the magic to the oil and gas sector, which was up by 0.18%. So so far, for the month, the loss has been moderated to about 0.4%, while the year-to-date return is still in positive territory, although it had lowered a bit, but it's back into the green at 9.51%. Now, let's flip over to the activity. In terms of activity, the volume of transactions carried out in Tuesday's trading session was up by 17.28% at 257.41 million total units. Value was up by 21.32% at 2.34 billion, in contrast to what we had on Monday. But in terms of the deals was lower by 14.67% at 4,410 deals. So now for that market, we also had, it was kind of like a negative market breadth. We had 18 gainers in contrast to 20 losers. But of course, the market, it still has a mind of its own. You have people who take advantage of the price losses. You still have some people who would hold on to what they have. And then, of course, you still have people who just wait, do the waiting game and to see what happens. But so far, the market has been able to get back its groove. Let's move over to the smaller unlisted securities market. It has been able to sustain its own uptrend. It was up, the NSD Securities Index was up by 0.11%, which is the same margin for the market cap. It was up by 0.11% at the same time too. In terms of volume of transactions on that space, we saw the volume of trading there was up by 5.35%. Total value was up by 13.19% at 44.98 million units, but the number of deals was lower by 13.19%, which is about 17 there. So now for that market, we also had the likes of Friesland, Campina, Wamco, as well as the NSD PLC being the top gainers there, while the lone loser was Niger Delta Exploration and Production PLC, which went down by 5.56%. Albeit at the same time, that market was in the green territory for a third consecutive session. Now, to tell us more about the equities market, let's speak to Richard Akimoladu, who is a stockbroker at CSL Securities Limited. Thank you for joining us, Richard.
Good morning, Anita. Thank you for having me on your program.
Yeah, I'm sure brokers are trying to catch a bit of smile, or try to broaden their smile at the close of Tuesday's trading session. Now, can you tell us what's happening at the market, particularly when you look at we're in the dividend season? So how is investor sentiment turning out in early midweek trading session?
So thank you for that question. So looking at the market, if you look at the market year to date, we ended the first quarter some weeks back, and you see that the performance of the market at least is on the positive. At least we started the year on a positive note. Year to date, we are around 9.5%, and this is due to, as you know, that first quarter is dividend season, and we saw a lot of dividend coming in with a very a good yield. When you compare the yield to what you have in the fixed income space, Treasury return for 1 year tenor is around 4%, and you see all these companies coming around with an average of about 10% dividend yield. So I think it's a good place to start the year. But when you look at it, entering into this second quarter, we noticed that there's some sell-off in the market due to the fact that investors are trying to book profit on some of these names.
Okay, so Richard, before I let you go, I just want one quick answer. What's your expectation for midweek trading? Do you expect the bull to continue, or do you expect the market to go back into the red? What's your forecast?
So going into the rest of the week and the month, we expect that it's going to be like a mixed bag. By the fact that what's going to drive the market is that Q1 results. We are expecting that to be coming in. So we will see investor positioning for this result as they come in into the market.
Okay, so thank you, Richard, for that analysis. So that was Richard Akimoladu, stockbroker at CSL Securities Limited. So now let's move over to the fixed income market. The fixed income market, it is still a bit quiet, kind of a lull of activities there. But as at the close of Tuesday's trading session, first of all, starting with the bonds market or the treasury bills market, it was rather quiet. Of course, we saw some contraction at the short and mid segments. But over here, what we have here, not much of activity there. The 8th of September, the 28th of March, and the 16th of March 2023 papers, they were all not too much of activity there. Total number of deals carried out there was 3 at a value of 1.1 billion naira. At the bonds market, it's also quiet. As yesterday, there was profit taking. We had a bit of profit taking on the March 2035 paper, which drove expansion at the long end of that segment. As well as the OMO segment, the OMO, the average yield there was unchanged at 3.6%. But in terms of the central bank's paper, we had only the 2nd of May 2022 paper having a bit of activity there. The number of deals carried out there was 7 and at a value of 5 billion naira. Now, for what the market is expecting, they're expecting that first, it's going to be bullish today. That's what they're expecting because, of course, there was an inflow of promissory notes which came into the financial system last week, and as well as the DMO just released the bond calendar for the second quarter, and they're expecting that it will be oversubscribed by investors. Of course, the government will be targeting a 720 billion naira borrowing for the second quarter. So that's it for the market, Ini.
Thank you so much, Anita. We'll certainly be looking forward to that expectation from the promissory notes and hoping that we'll see the impact. At least there's a bit of liquidity in the market, then we'll see movements right there. Thank you so much, Anita.
Pleasure.
We'll take a break now. When we come back, well, we're happy to say London correspondent Juliana is back. That'll be after the break. To stay with us. This is Business Morning on Channels Television. You're welcome back. Where there are conflicting opinion on the decision to hike up national insurance for millions of workers in the United Kingdom. Many say the timing is wrong. Well, thank God we have Juliana back now to give us details. Hello, Juliana. Good to have you back.
Good morning, Annie. It's great to be back.
Yeah, so the national insurance rate hike starts from today. How will it look like?
Well, as you quite rightly said, despite Chancellor Rishi Sunak coming under increasing pressure to delay this 1.25% increase in national insurance, it has gone ahead. And from today, I think about 30 million workers will be greatly affected by this increase over the next 3 years. This 1.25% levy on jobs is expected to raise over £12 billion for the NHS and social care. It was first announced in the autumn statement last year, and that's because of the sheer amount of pressure and stress that the NHS was under during COVID-19. Of course, this was before the war. And this was before the surge in inflation, which is really spiralling out of control now. Lots of families in the UK are grappling with higher energy bills, higher fuel costs, as well as higher costs to put food on their table. But Chancellor didn't bow down to the pressure. So as we said, from today, we will see that increase. There is a threshold, however. So if you are earning below, I believe, £9,880 a year, you won't have to pay this increase. And then, of course, during the spring statement a couple of weeks ago, that threshold was risen to about £12,500. But you will still be paying this 1.25% increase until July, and then the threshold will rise to just below £13,000.
Okay, and then what's going on with British Airways? Yesterday, they withdrew 6 flights. On Monday, they cancelled 62.
Yes, that's right. And today it's even more. Over 100 flights have been cancelled out of Britain's busiest airports today, most namely Heathrow Airport and Gatwick Airport. I believe British Airways have had to cancel about 78 flights. EasyJet have had to cancel over 30 flights. And this is all about COVID. A lot of the reasons why there are so many people flooding to the airport is because the COVID-19 restrictions on a whole have been completely lifted in the UK. So you don't have to have a vaccine to travel or have a PCR test, which is why the demand has been soaring. Airports haven't been able to cope with this demand because they have a shortage of staff. Many staff are off because of COVID-19 illness, and so it's led to complete chaos. We also had a resignation yesterday of the managing director, Karen Smart. She looks after Manchester Airport, a really big hub for people in the north of England to get into Europe. She quit her position, and it does appear as this chaos is going to continue for the next few days. Pretty bad luck for those who thought they'd be able to get away with their family for an Easter break.
Wow, not a good one, not a good one. I hope it doesn't bring back the restrictions, COVID restrictions there. Well, thank you so much, Julian. I will talk to you again during Business Incorporated.
Thank you.
Let's head to the crypto market now and see how Bitcoin and the other coins are faring. Hi, Ladi.
Well, hi, it's midweek and it's a red market this morning.
It's not yet Friday. Why should we have a red market?
It's coming earlier than Friday, but you know that our Friday trend, it's been off and on, for a while now.
So we share it with the midweek now.
Maybe, but it depends on how long the midweek trend actually goes on for. But we've seen that major markets actually rattled yesterday with, the U.S. Fed actually signaling more aggressive rate hikes, and we've seen, the crypto market have that correlation with the Nasdaq. That one dropped about 2% yesterday, and we're seeing a drop in the crypto market. Fair Grid Index this morning, we're seeing 48 points. Still neutral, but yesterday we're at about 51 points neutral, but that's a pullback at this point, showing that it's tending more towards fear at this point. Market cap, $2.09 trillion. That's down about 3.23%. We're at about 2.15 yesterday, but we're seeing a lot of cash roll out at this point. Volume traded $113.53 billion. That's up about 5% this morning from the sell-offs we see in the market. Bitcoin dominance 41.17%, and we see price of Bitcoin this morning $45,491. All eyes on this $45,000 support. Anything below this could spell a short-term bearish movement for Bitcoin. It's down 2.45% this morning, and we see volume trade at $34.38 billion in Bitcoin, and we see Ethereum losing that $3,500 mark. It's down 4.22%, and volume trade at $21.13 billion. And looking at the top odds by market cap, it's all red, with BNB down about 2%, $442. Cardano, $1.15. That's down about 4.16%. And we see Solana there losing that $136 mark. It's at $126 this morning. And XRP, surprisingly, still quite stable, around 80 cents. It's trading at 81 cents. It got about 85 cents yesterday. It's down about 1.01%. So we're seeing traders sell off, most of these altcoins at this point, with volatility seen with Bitcoin. And we see top 5 gainers this morning. We see Steppen there, the move to earn platform. That's had an incredible run in March. It's up about 9% this morning. Had quite a pullback yesterday from the sell-offs we saw, but it's back on the top gainers list. And we see Dogecoin, that's Elon Musk's baby there. Doge up about 8.61%. We've seen Elon Musk in the news recently for buying that stake in Twitter. So we'll see how he preaches Doge at this point. This could be a reaction to Elon Musk being in the news at this point. And we see USDN 88 cents. That's up by 8.15%. And we see MENA there, $3.37, up 5.86%. All right, let's bring in Mary Jane Ume, DeFi researcher right there. Great to have you, Mary Jane. Great to have you.
Good morning. Good morning, Ladi.
Good morning, Mary Jane. So the report from PwC shows that over 80% of central bankers are considering launching digital currencies. How do you see this trend?
Okay, first thing first, it's a good thing, but at the same time, it's actually very, very tricky. And I would actually want to break down this thing so that apart from the way I'm saying it, everybody could actually have their own perspective or probably bring up their own narrations from my explanation. All right, so we would boil down together with one consensus and probably bring out, let's say, a narrative out of all of the explanation. So first thing first, I'm not permitted to go on with breaking down the term, what CBDC means.
Right,
then
go ahead.
We will come down to the effect. Now, CBDC is like a general term for central bank digital currency. All right, and we already know the term of cryptocurrency. Before I move on, this central bank digital currency isn't a cryptocurrency. Now I will explain. Now there's this this view that it's something big because they are adopting the ways of cryptocurrency. One thing is to clear the short, it isn't a cryptocurrency, being that cryptocurrency is decentralized. All right. The reason why cryptocurrency came to be is to take out financial powers, financial governing powers from central bodies. When I mean central bodies, I'm talking about banks, I'm talking about federal government. But this particular digital currency, all right, is, as the name is, all right, central bank digital currency. That means it's under the control of the central banks, all right? It's under the control of the federal government that is issuing it. But the only thing is that they want to go digital, all right? The way we have transformations of money, when at a point the forms of money was using cowries, then we went into gold, then we went into coins, then we went into paper money, then went into the normal nylon money that we have. So it's like them just transform, or probably them evolving in their means of money, not that it is cryptocurrency. Now, I would love to continue, right? CBDC is like a digital form of a country's fiat currency. I just said
Right.
It's more like an evolved way, all right? An evolved way of saying probably we don't want to use the fiat money anymore, right? We want to go on to digital currency. But this
All
time,
right, Mary Jane.
we are not saying it in general.
Okay, Mary Jane.
Following?
I'm so sorry. We've run out of time, Mary Jane. Quite an interesting lecture from you there. Thank you so much, Mary Jane. We'll continue this conversation another time. We've run out of time. Thank you so much. But looking at the top 5 losers, we're seeing the evolution of money at this point, with central bankers.
Mary Jane just wants everyone to be carried along.
Mary Jane wants to break it down really at this point, but we've run out of time.
Same money, it's just digital.
It's just digital, yeah. We've come a long way from cowries at this point.
It's a journey.
It's quite a journey. So if you look at the top 5 losers, there's double-digit losses with waves and runes. So it's a red market, but let's see if there's some kind of bounce.
Well, I do hope.
Today.
I mean, just to compensate us for this, on Friday we'll have a green day.
Maybe we'll have that transition to Green Fridays.
Thank you so much, Ladi.
All right.
And that's it on the program for this midweek. We'll do it again tomorrow. We have 2 more for this week. Make sure you do join us for those ones. But 1:30 we'll do Business Incorporated. We'll give you updates from the world of business. I'm Ini John Mekwa.